All right, good evening, everyone. Welcome to the Hurley Investments Market View commentary for Monday, the 24th. We'll have one more next Monday, and next Monday will be the last day of the month. Boy, I can't believe 3 months has gone through already for our year. We are just moving right along. All righty. A couple people asked some questions, so we're going to go through a bit by bit on what we're doing and why. Last week, I made the comment, market uncertainty has led us to be more nimble and moving protection around. We want to have some protection in place instead of not enough. And some people asked me yesterday, well, not yesterday, on Friday, why didn't we get more stuff in place? Why weren't we moving more positions around? And it just comes back to our markets. Today was the first big day where the Dow broke the 200-day and we have a positive day. So someone tell me, what does the Dow breaking the 200 mean? Someone give it to me in plain English. What is the Dow Jones Industrial Average breaking the 200-day mean? Boy, I want to repeat that one, but you're going to have to say that a little bit differently. Yeah, there we go. Okay, not much. I couldn't say what Lance said previously. Not an effing thing. It actually means that there are 31 stocks that for a single day have broken above the 200-day. That could be important as we're almost above the 50 level, but that still says 49.84. We do have crossovers here. It's kind of nice to see a week where we had a high and a low. So we had a week of building a base. But yes, the Dow Jones Industrial Average means not a hell of a lot. It's 31 stocks that just broke above the 200-day simple moving average. So yes, it does not mean a whole lot. The SPY. Again, I love the levels of support and resistance, 3 of them, that the SPY gave us a break above the 200-day. The 200-day sits at 57.52. We're at 57.62. We are 15 points above the 200-day, but we're still bearish on the RSI. We're really close to having crossovers, but we have our first crossovers right here. This means a little bit more. But again, it still doesn't mean a whole hell of a lot. So I'm going on your theme there, Lance. Last but not least, the NASDAQ. Much more important that the NASDAQ is currently bullish on the RSI. 2 to 4 days bullish above the 50-day simple moving average. And we're pretty close. Not quite bullish, but we're awfully darn close here. So still technically bearish because of the MACD, but we're more in line. And because we have 4 days, this is why we started to be a little more bullish on Friday. We took off not Micron, we took off some NVIDIA extra protection. We We took off some Google, no longer has protection on. We're looking to take Apple and Micron protection off tomorrow. But this is what we mean by being nimble, is that we've been kind of playing the smaller, shorter term positions. Why? Well, let's take a look at some of our stocks. Apple, still bearish, but we're getting a break above the base for 8 days that it was building down there at 210. This tells me we probably have an Apple put somewhere between 210 and 212. That's most likely where they're buying their shares of stock. Boeing. Nice run on Boeing. We took off our 160s, 180s. We're now taking about a third of the profit, and we put 180s, 200s on. Probably going to take it off closer to 188 that are the highs, but it's good to see that we have Boeing heading back higher. Disney, building a base on top end of its range of its base. The base obviously sits somewhere between 97.50 and 100. But we've got 2 weeks of Disney building a base. Yes, Disney still bearish. Don't have our crossovers on the MACD. Obviously not above the 50-day. Coming off of oversold for a month on the Williams %R. But I like that they're building the base. It will be interesting to see if it can break above the 101.08 range that it bumped up somewhat close today and obviously came back down. Yeah, Micron. Of course, go Micron. Great earnings. I got an article I'll show you guys later. Great earnings, great guidance, and it falls from 102.50 down to 93. The news is we were watching Micron and we put 104 puts on right up here. So we've got 104 puts that we're doing pretty good with. It's interesting to see because the 50-day is at 96.64. It 1 day above the 50-day. It really should have great earnings. Technically speaking, we are still bullish on the RSI by 0.44, still bullish on the MACD. Obviously, the crossovers have gone negative. So we've got 2 out of our 3 crossovers. Very interesting to be looking at Micron. So let's go. Yes, you guys asked for a couple more. Baidu has 105 short call on it. It's down at the top end of a low range that it bounced above for all of 3 days. Basically, you have a range at 96 and a bottom range at 92.50. All right, what else was the other one you guys wanted? NVIDIA. Of course. NVIDIA. I don't know what you call NVIDIA, to be 100% honest with you. It's just kind of in no man's land. Below the 50-day and the 200, we have a bearish cross where the 50 goes below the 200. So you're looking at an 8% drop from that 117-ish level, which would put you back 105. Wouldn't surprise me to see it hit 105. Barely bullish on the RSI, and we still are holding our bullish trend on the MACD. Unfortunately, we're showing overbought on the Williams percent R, which is a medium stochastics. Big money's already overbought. Last time it hit it, it came back down. Yes, my expectation is we're going to see NVIDIA come back down to the 104, 105 range. All righty. Let's see who we have here. So someone asked me via email about dividends and why we're not just doing covered calls on dividends. So here's a couple examples just to help you out. But the short answer is anytime you are short the stock, whether it's an outright short position or a short call, you are, for all intents and purposes, you are responsible to pay the dividend. So if you have a spread, the long call offsets the opportunity, but here's some information that I got just off the internet for you to understand that we're asking about it. When you sell or write a call option, you're obligated to deliver the underlying stock if the buyer of the call exercises their option. The dividend risk. If the stock pays a dividend while you are short the call, the option is exercised before the ex-dividend date, you will be required to deliver the stock, and the long call holder will become the owner of the stock it is entitled to. Paying the dividend. As the short call writer, you are responsible for paying the dividend to the long call holder who now owns the stock. So here's what I'm trying to say. If you are shorting a call on a stock position, you just gave away the dividend. If you are short a dividend paying stock, you are not entitled to receive the dividend and must pay it instead to the lender of the borrowed shares. So if you have a short call or a covered call on your stock during the X date, the recording date for the dividend, the declared date, I guess, would be a better way to say it, you just nullified your dividend payment. So a lot of you have been asking, Kevin, why aren't you doing more short calls? Some of us have those dividend paying stocks, and this is a really bad strategy to do. Like for the people that are like, oh, just short a call for a year, right? Short a call, take a big credit in. A lot of people were doing it on Verizon and were doing it on AT&T. That means they missed out on 4% plus of dividend payments to them. So here they're like, oh, you get a 7.5% credit on that dividend. Well, if you lost 4.2% because you get a 7% credit on the short call. Kevin, that protects you 7.5% to the downside. Yeah, but if you have that short call way out there in time for the year, then you lose 4.2% of the dividend, which means you only get a 3.3% net credit. You really have to add up all the sum of the parts. So the couple of you that were asking, hey, why are we not doing more of these covered calls? Why are you not going out in time 3% on, 3 months for a 3% credit on Micron or Nvidia. The reason why is we have to take these off so we don't lose our dividend if we care about the dividend. So that's just something that someone brought to my attention. They're like, hey, I noticed you're not doing a whole lot of covered calls, even though we're somewhat in a down market. Well, we have done it on Meta and Nvidia and Micron, but we kept them on and we took them off pretty quickly when we got like half of the covered call credit or more. The real reason why behind that is not because we're just trying to take a quick hit, but what we're trying to do is to make sure that we're not, basically that we're not losing a dividend over a covered call credit. That's the short answer. A lot of people that you also asked before about hey, why aren't you doing more with like a full collar trade and you seem to be taking it off? That long puts don't cost you the dividend. The long puts don't give you that issue where you're like, dang it, I just lost out on my dividend here or there. The long puts just are more protection. They're the right to sell a stock. It's a much better protection strategy than a covered call ever will be. So that's just something to pay attention to, that hey, you got to make sure that you just got to pay attention and add up all the pieces of your trade. If you forget pieces or you're losing pieces, you're not giving yourself a correct analysis on what you made or didn't make in your positions. So that is just something to pay attention to when you asked me about why we're not doing more covered calls for a longer period of time or going way out in time. That's the reason why. Okay, I'm gonna poke fun at the briefing right now. I'm gonna poke fun at the market. Market uncertainty. Tariffs and spending cuts have shifted market focus from tax cuts and deregulation. Economic indicators. Mixed signals from jobless claims. I disagree. They look really good. Copper prices and yield curves do complicate the economic outlook. Investment shifts to defensive sectors outperform. Foreign markets gains, U.S. market volatility increases. I just thought it was quite funny because, yes, we hit a market high on February 19th, and then we went into a 10% correction on our S&P 500. The Magnificent Seven have sold off like there's no tomorrow. So let me just run down here to the bottom. The short answer is this. We don't have our bull market anymore. We have a Fed who, again, is data dependent, which if they paid attention, we just had a 10% decrease in inflation on February's numbers. So here we have all this worry about tariffs and inflation, and it's going to cost us more money because the consumer pays that difference. Yet our inflation dropped by 10% from 3.1 to 2.8 in February. So here's the question. The question comes down to, do we have fundamental reasons that our market is changing? Or do we have fear reasons that our market is changing? If you believe that they're fear reasons, we still have a good bounce back in our market sometime in the future. If we have fundamental reasons where everything's going to cost more money and so forth, then we're probably going to be heading down, and we will hit that 20 to 35% drop. The market, in my opinion, should be going back down. Not because of tariffs. Again, I've talked to you about tariffs and my thoughts on those. We've had the tariffs for the last 8 years. We're tariffing Canada, which is new, that is less than $1 billion coming into the United States and going out of the United States on, which I know $1 billion to us seems like something huge, but $1 billion to the United States isn't that important. I mean, if we're exporting, export totals, US of A. U.S. goods exported $2.1 trillion in 2022. 2023 was $3.05 trillion. I don't have 2024 here. But if we think that tariffing Canada, and they're not buying our goods, which is right around $1 billion out of 2.1 trillion, we don't understand the economics. I would love to see a bounce, like a real bounce, like a V recovery. I don't see it in the next couple of months. So we're going to protect. We're going to see about getting through a indecisive administration right now. It seems like every day we have something new that comes up. But if you're worried about stagflation now and inflation, then there's a misunderstanding. I love the briefing.com. I enjoy what they typically have been saying, but in 1 week, they just changed their worry from inflation and tariffs to stagflation. With growth faltering and inflation rising, the short answer is briefing.com just showed their cards that they don't have a clue what's going on. If you go back to the Fed minutes and what was said by Powell, even the FOMC voting members right now don't have a clue what's going on. They're supposed to be our 11 most influential economists / bankers that we have. Again, some tariffs are on. We're going to hear about disinflation coming up. The short answer on what's happened is we've had some fear, and some people took some great profits after a 24.6 and a 23.1 or 2. I don't know what it was last year exactly. But the short answer is after a 48% up year, 2 years in a row, people are taking profits. That's as simple as it has to be. If anyone would like to make any comments that I can report to the group, this is your chance. This is your chance to say, Kevin, I think it's this. I think it's that. In all honesty, I'm more than willing to hear some other comments, but it doesn't seem to me that that's where we're at, that we have disinflation. It's funny how they just go to different things. If anything, we just probably had our profit taking, which is going to reset our market so we can make another run higher towards the middle to end of the year. Any comments for you guys? And Lance, If you don't mind, go ahead and send to me what you sent in that email. I'm going to give you guys quick 10 seconds to type something in. Can you call? Yes, I can definitely do that. Lance. Kevin, I don't think anyone knows what's going to happen in all reality. So I'll take back my comment I emailed you last night, which was a pretty good email, guys. Um, I mean, to keep making things up, we obviously are going through a new administration that's going to do things differently. They're going to purge or cut all the way across the government. And to be honest with you, I don't think that's a bad thing. Some of the things that we're spending money on, I don't think go with the majority of the belief system of the people that the politicians are supposed to represent. So the fact that we're going to cut all kinds of positions through government and save all kinds of money there, I'm 100% for and I'm 100% on. What does that do to our stock market? It obviously has made an opportunity to take some profits. Can we blame it on tariffs? Can we blame it on wars? Can we blame it on our 6 reasons that we had last week? Of course we can. And by the way, I do apologize for not being available last week. I thought I sent out the email, but I made that mistake on GoToWebinar. That was my fault. Hopefully you've gone to myhurleyinvestment.com and listened to my last week notes. But instead of making things up, go with the facts. And the facts are the Magnificent Seven have taken some big hits as people have taken profits. Our stock market has taken profits in certain stocks that were fundamentally sound and profitable. The stocks that are less fundamentally sound or haven't had their runs up, they have stayed pretty much sideways. So let the numbers do the talking. Follow the CPI numbers. In fact, we've got some interesting numbers that are coming up this week on Friday. Economic reports, durable goods on Wednesday, GDP on Thursday. GDP is supposed to be 2.3 for the last quarter. It'll be interesting to see what the GDP is for the first quarter of this year. But PCE prices come in on Friday. And when those keep going down, it will be very interesting to see what the new comments are by the FOMC. Next opportunity for a rate cut is going to be in June. We do have a meeting, I think it's in May, but there's no conference after May, and it wouldn't make sense to have a rate cut then. So the next rate cut opportunity, in all reality, will be June. All righty. Not much by way of earnings. Couple home builders, Dollar Tree, Lululemon on Thursday. I have a very interesting article on Magnificent Seven on how much they've lost in market value, worst performers. It's all right here. And the neat thing is I'm going to be the one that says right now what a great buying opportunity it is for people to take their profits in these individual stocks to give us the opportunity to buy in lower. We've had some great puts in place, so we're looking for a couple of these to add shares in the near future. S&P 500 just entered a correction. Here's what usually happens. A very interesting article. It is an opinion article. So yes, history shows that the S&P 500 tends to rebound, but it's kind of one of those 6 out of every 10 times it does it. So there's a 2 out of 3 chance that it rebounds, but don't be surprised if we do test the lows one more time. That's why we haven't ripped off all of our protection. We put it some farther out there in time so we can retest the lows. And for those of you that were frustrated with Micron, so are we. Micron shares jump on the earnings beat. Rosy guidance as the revenue centers triple. But yes, after their earnings, nothing like losing 8%. Someone, I can't remember which one of you wanted to share this or have me share this with them, but the numbers are solid. We should probably see Micron go back up to 105. And yes, I could definitely show you a chart on Micron. Let's pull up a chart on Micron really quickly. On Micron, we have $104 long puts in place right now. So look at Micron. 54 still bullish. Obvious crossovers are going to be bearish. The stock finished at 96.94. The 50-day is 96.64. We are 1 day 30 cents above the 50-day moving average. Yes, we're still technically bullish on the MACD, but it looks like it's coming to a point. And we did bounce off the median line on the Williams percent R. To be honest with you, rarely, if ever, do you bounce off of the median line. So the R is just a medium stochastic, seeing where big money is moving money at this time. So short answer is this is a great example of a stock that's in no man's land. Not sure if it's going to go down and test 85 again. Not sure if it's going to go down and test 93.70 where it dropped to. It had great earnings, and this is a great example of a stock that can't beat the market. How would you say it? Low tides sink all ships. A great example of what happened with Micron. All righty, let's keep going. Interesting article on how much the U.S. stock market loses. $5 trillion in value in 3 weeks. Again, these are big numbers that we're talking about, but I would expect a rebound come June-ish, our next earnings. And last but not least, inflation eased in February to 2.8, coming down from 3.1. There was the 10% drop, and it's pretty interesting to look through some of these inflation numbers that we have here. In all reality, if Trump lowers the cost of our gasoline, we're going to see inflation come down to a point. It'll be interesting because, yes, there are certain areas of inflation that is not coming down. Chicken eggs are still high. There are other areas as well, but we'll see. The short answer is we'll see, and we'll see if we'll see how long these tariffs are in place. Don't forget, we should see some good durable goods numbers because smart companies bought a lot of product materials ahead of time. And they did it ahead of time to make sure that they had the ability to afford the materials prior to tariffs. So with that said, what questions do you guys have for me today? What questions do you guys have for me today? Interesting. I think it's interesting. My sound might have just taken a bit of a hit there, but someone just typed in, I'm currently in McDonald's and Caterpillar. I like the McFish. Again, those are two that I would see rebounding higher in the near future. Kevin, will you talk a little bit on your next expectations? So yes, my next expectations is we're probably going to move sideways until we get clarity and until those 6 points that we mentioned last week are available to be resolved. An understanding of the tariffs, maybe a full correction, a Ukraine-Russia resolution, tax cuts. There's 6 different points that we brought out last week. I think if a couple of those start coming to pass, we'll see our market rebound here come June through the June earnings. That would be my expectation. I'm not thinking so much in April, May. Even if they are good earnings, it's too close to tax season and not enough will get done. So it's not necessarily the next earnings season, which will start usually the end of April. I think it's going to be June. This probably will not be a sell in May and go away. It'll be a rebounding summer. So for the next couple months, I figure we still go sideways. Are there any other questions? Going once, going twice. So your point is everyone else has it wrong but you. Ouch, Lance. So my point is this. If you follow the numbers, Lance, it's not inflation. We can't have a drop in inflation of 10% and also have a 10% drop in our stock market. That doesn't coincide. It's tariffs. Tariffs haven't been in place. There's nothing tariff related that's really outside of the norm or that even affects the United States GDP. I think it's fear. If you can show me a number that says otherwise, I'll present it to our group. But none of those items are coming across in a number that says we needed to lose 10% in our stock market. In fact, my doctors are the ones that have presented the most important thing is that the problem with having Kennedy in for our health and services guy is that we're going to lose a lot of R&D when it comes to pharmaceuticals in our country. That'll probably go back overseas to Europe where they're miles ahead of us, maybe in some areas where they are allowed different type of drugs overseas that don't pass FAA approvals or FDA approvals. I don't remember which one is in charge of it. But that hasn't come in yet. And could that just be a fear? It could be. Because he says he wasn't going to. But both of the doctors that I talked to in our group, that's one of their biggest fears. Will it come to pass? You know, Kennedy Jr. is a politician. Probably. I don't know if you can trust any of them. I love Doge going through some of the stuff. To be honest with you, there are a lot of Democrats that are worthless by way of jobs and skills that get $160 some odd thousand a year salary that become millionaires. There are some Republicans as well. Please don't think it doesn't cross both sides of the aisle there. But it does seem like more Republicans have been business orientated and have made money before going into politics. But I'll tell you, one of the ones that seems to get a lot of kickbacks right now, who went from $100 million to a couple $100 million in net worth, was Mitt Romney. So there's someone that got a crap ton of kickbacks. And after he did so well in the first debate against Obama, I wonder if that Republican got bought off. Sure seems like it, and the numbers show as much. So I'd love to see all these kickbacks that seem to come around get cut out of us and our taxes having to pay them. Any other questions for you guys? I don't see any more coming in. So with that said, guys, expect a little bit of a sideways movement. We're going to keep taking some protection off more on the Mag 7s to see a rebound there, but we're doing it slowly. There's been nothing through our technicals that say we rip everything off and we put it on. If anything, we're at the top end of our range. A down day tomorrow means we're going to put some more stuff on. So, guys, appreciate you being here. I hope this was helpful. Do read these notes. I'll get these notes. I'll try to get these notes up early tomorrow morning. I need to check with Dave and see how quickly we can get those up, but I will do my best on those. Guys, take care of yourselves, and I'll look forward to seeing you next Monday evening. Goodbye.